we'll be going over how to claim the Lifetime Learning Tax Credit, also known as the LLC in some of the IRS forms and publications. So, first, we're going to talk a little bit about the Lifetime Learning Credit and how it differs from the American Opportunity Tax Credit. Both of those are filed on IRS Form 8863, but we'll get into the nuances of how they're different. We'll talk about the credit amount, the eligibility criteria, like who can claim the tax credit and under what circumstances. We'll actually go through the mechanics of claiming it, and to do that, we'll actually walk through the parts of IRS Form 8863 as if we were trying to claim it on our tax return. So let's go ahead and begin. So a little bit about the Lifetime Learning Credit. It's a tax credit for qualified educational expenses. Broadly speaking, the IRS considers tuition and the mandatory course enrollment fees to be qualified education expenses. Within that broader definition, class supplies and things like books that are required for a specific class would be considered qualified educational expenses, but a lot of other expenses that you might associate with college would not necessarily be so. For example, room and board or rent, enrollment fees for voluntary activities, those generally are not considered qualified educational expenses. So I mention this because a lot of college planning can be complicated. So you may have access to various sources of money or tax benefits. So, for example, you might be able to claim a lifetime learning credit in the same year that you would take out distributions from a 529 plan, or you might have access to scholarships. And each of those have different fees and expenses that they may be used for. So just kind of pay attention to that so that you can plan accordingly. So the Lifetime Learning Credit is available for undergraduate, graduate, or professional degree programs. Conversely, the American Opportunity Tax Credit is only available for the first 4 years of higher education. And finally, this is not this is a non-refundable tax credit. So it can reduce your tax bill down to zero, but it can't give you a refund. Whereas the American Opportunity Tax Credit can give you a refund of up to $1,000 in a tax year. That's the refundable portion, or the maximum refundable portion, and that can occur even if you don't have a tax liability that year. So just real quick, I am going to show you a chart that you can find in the instructions for IRS Form 8863 that kind of help you with the side-by-side comparison between this and the American Opportunity Tax Credit. So this is the form. We'll go over that momentarily. And in the instructions, there is a matrix chart that you can kind of see, maximum credit under each program, the income restrictions, things of that nature. So I just wanted to kind of show you that if you needed to drill down for deeper reference. We also include much of the same information in our article, so we'll put a link in the show notes to that. So the maximum credit amount is $2,000 per year. Unlike the American Opportunity Tax Credit, where it's a dollar for dollar tax credit for up to the first $2,000 and then a percentage after that, this is just a flat percentage for the first $10,000 of qualified education expenses. So basically, what that means is if you're looking side by side, the American Opportunity Tax Credit can be a better deal if you're eligible because you only have to spend $2,000 to get $2,000 worth of a tax credit. Whereas with the lifetime learning credit, you would have to spend $10,000 to get the same $2,000 credit. And of course, we mentioned the refundable portion of the American Opportunity Credit. However, the one difference is that there is no lifetime limit. So as long as you're enrolled in a professional, in some sort of a curriculum of higher education at the undergrad, graduate, or PhD level, you don't necessarily need to. You don't need to count the number of years that you're enrolled. You do have to spend $10,000 for each year to get the maximum annual credit of $2,000. So there are some additional eligibility criteria. We'll go with the student criteria. So the student does not necessarily need to be pursuing a degree or other recognized credential. You can be eligible for the lifetime learning credit if you took one course during the tax year. However, you cannot claim the American Opportunity Tax Credit in the same tax year. So this can be maybe a planning challenge for people that, say, graduated from undergrad school and plan to claim the American Opportunity Tax Credit, but then still have a semester or more of time where you would be kind of eligible, on the merits for the lifetime learning credit. So just in that case, know that you can take one or the other, but not both. And in the undergrad to graduate type of situation, you're probably better off claiming the American Opportunity Credit, because once you get to grad school, you won't be able to do that. So take advantage of that credit, especially if you're eligible for the full $2,500 as opposed to settling for the $2,000 maximum. But for students that have a felony drug conviction, there is a stipulation stating that you're not eligible for the American Opportunity Tax Credit with that on your record, but that restriction does not apply to the lifetime learning credit. So again, there are a couple of areas where this might be an option, and we'll go through step by step some of the eligibility criteria where the form itself, Form 8863, actually kind of forces you into a decision on which tax credit you're going to take. So you generally have to have received a copy of IRS Forum 1098-T in most cases. So let me show you that really quickly. You would see this. So I didn't complete the rest of it, but let's imagine that John Doe received this at the end of the tax year. And so there is the lines that you would want to pay attention to would be line 1. That's the total payments received. In this case, that's $10,000. So newsflash, in our case study, we'll be using this as the number that we put in for the tuition and expenses. So the other thing that I would ask you to pay attention to is whether or not box 7 is checked. So this is a question that will come up in the form. And what this means is this is a 2024 version of IRS Form 1098-T. So what this is asking is, does this amount include any amounts that were prepaid for the 2025 tax year, specifically from January through March? So just keep that in mind. So there are modified adjusted gross income requirements, also known as MAGI. We'll get into more specifics in the form because it actually drills down into the numbers and the criteria and so on and so forth. Finally, you have to have some sort of like a valid tax ID number. If you're a non-resident of the United States, you have to be eligible to be treated as a resident for income tax purposes. So generally speaking, there's a big difference between what resident alien is and non-resident alien is in terms of tax policy versus immigration status. I can't really speak too much on the legal aspect. That is practice of law. However, I can speak in rough terms about what it means from a tax perspective. So if you are a resident, then you should be eligible for either a social security number, if you're on a pathway to permanent citizenship. If not, you would be able to obtain an individual taxpayer ID number, or in cases of adoption, an adoption taxpayer ID number. So to claim the lifetime learning credit, we'll actually walk through this, but what this means is you would complete parts 2 or 3 of IRS Form 8863, and then since it's all non-refundable tax credits, those tax credits will go down to Schedule 3 of your Form 1040. So without further ado, let's move on to the tax form. So up here we have IRS Form 8863. So Part 1 is the refundable American Opportunity Credit, which we don't need to worry about here. Part 2 is non-refundable education credits. So this is both for the American Opportunity Credit and the Lifetime Learning Credit. And we'll spend a decent amount of time kind of walking through this so I can point out some key concepts that we lightly discussed earlier. And then in Part 3, we're going to complete information about the student and the educational institution. So at the very bottom, the $10,000 of qualified education expenses, that came from the 1098T. So we went ahead and put that in line 31. We will walk through the rest of Part 3, but to kind of give away the ending, by the time we get to the end of this, it will have directed us to go to line 31. So in Part 3, John Doe is claiming this tax credit on behalf of his daughter, Elizabeth Doe. So there are tax filer rules that apply. Generally speaking, there are limitations as to whether or not the college student can claim themselves for this tax credit. So if both of your parents are still alive, unless you're completely emancipated, generally speaking, most of this is going to be the parent filing to claim the tax credit for their kid. So generally, Elizabeth Doe, here's her social security number, and she went to Acme College right down the street from John's house. So for the tax year, she did receive the Form 1098T, but no, box 7 was not checked. We put in the employer ID number of the college in question, and then we're going to go through these criteria. Generally speaking, if you're trying to claim the lifetime learning credit, then you'll just go through until you see one of these answers that says stop, and then you can skip the rest of this and go down. So we'll just say that the American Opportunity Credit has previously been claimed, so we're automatically going to line 31 to drop the lifetime learning credit information here. But if for some reason you need to do that, or you need to keep going, here's the criteria for the half-time for at least one academic period. Remember, the lifetime learning credit just requires you to take one course. Line 25 is did you complete the first 4 years of post-secondary before the tax year? So grad students wouldn't be able to claim the American Opportunity Credit, even if they didn't claim it in the past. And then here's the controlled substance felony conviction. All of these, if you answer the kind of tripwire question here, you'll see stop, and then you'll just take everything to line 31. So that's where we got here. So now we go up to the top of Part 2, and we're going to walk through kind of step by step. This first line really pertains to any amounts that you're carrying down from the American Opportunity Credit. So you're backing out the refundable portion, and then you're calculating the non-refundable portion of that credit in Part 2. But since we're not doing that, we're just going to put 0 and kind of skip down. So we'll enter the amount of all line 31s from all part 3s. So if you had more than one college student that you were paying for, you would need to complete a separate part 3 for each student. So if you look at this, there's only room for one name, one social security number, one college. Although you can put a second college if for some reason your child went to 2 different colleges in the same year. But if John Doe needed to put his son Scott Doe in here, he'd have to just rip off another page and put Scott's information in separately. So we have the $10,000, which you take the smaller of line 10 or the $10,000 and you get $10,000, which we multiply by 20% and we get $2,000. So that's the theoretical maximum limit. Now we're going to apply any of these credit limitations, and there's going to be a couple. First, there's going to be modified adjusted gross income limitation, and then we're not going to go through the credit limit worksheet, but I will show you what it looks like, and I'll walk you through the intent of that credit limit worksheet. So let's get through the modified adjusted gross income adjustments here. So we're going to enter in line 13, since John is married, the phase out begins at $180,000. We're going to enter that $180,000. We're going to enter the amount from the line 11 of Form 1040. So that is your tax liability plus a couple of additional taxes, specifically the premium tax credit, like any advanced premium tax credit that needs to be repaid, or the alternative minimum tax. So in this case, John Doe doesn't have either of those, and let's just say that his total tax bill was I'm going to skip all that. What I meant to say was line 14 is the adjusted gross income plus certain income that was excluded on either foreign earned income, which is IRS Form 2555, IRS Form 4563, which is income that was sourced from American Samoa, or excluded income from Puerto Rico. So please forgive me. The tax discussion will come in a little bit later. So basically what we're talking about here is the adjusted gross income, that's the line 11, plus if you file for foreign earned income, that's the IRS Form 2555, and that is used to claim either the foreign housing deduction, foreign earned income exclusion, or foreign housing exclusion. If you're excluding income from either Puerto Rico or from American Samoa, you would need to dig into the details in publication 970, figure out which items of income you need to add back in here. Generally speaking, if there's income that's excluded from one of these 3 sources, you have to put that back in. So John Doe doesn't have that situation. So in line 15, we're going to subtract the 150 from the 180, and we get $30,000. Now, if this were 0 or less, that would mean that this is actually bigger than that. So that would mean that we would have basically a 0 non-refundable credit. So we wouldn't be eligible to take this credit. But since the $150,000 is less than this limit, we're going to subtract that. We get $30,000. In line 16, we're going to enter $20,000, and now we're going to compare them to that number to line 15. So line 15 basically says $30,000. That difference is more than the $20,000, which means we're not subject to the phase out. So let's imagine that we were, say, at $170,000. Then that would mean this is $10,000, and we would then have to take line 15 and divide it by line 16, and we would get 0.50, or yeah, 0.50, which means that's the amount that we would take the credit on. We would apply the credit right here to line 18. All right. So because we're well below that phase out, and the phase out is between $160,000 and $180,000, we don't need to do that calculation. We are able to put the full credit amount in line 18. And now we have to apply this to the credit limit worksheet. So we'll go over the credit limit worksheet. We're not going to go through step by step. There is a different video for that, but I do want to show you what it looks like. So basically, this is the credit limit worksheet. And what we're doing is we're taking certain items of tax, and then we're applying all of the other non-refundable tax credits that may supersede the lifetime learning credit. And then we're kind of making a determination which credit gets pushed down to the bottom, because with these, you can't push your tax bill below zero. So if one of these other superseding tax credits pushes your lifetime learning credit down below the fold, then you don't claim it on IRS Form 8863. Instead, you would go with the superseding tax credit. So the real crux of this whole calculation is the tax credits that are on lines 1, 2, 6D, and 6L of Schedule 3. So fortunately, we have Schedule 3 right here. And basically what that means is the foreign tax credit here on IRS Form 1116. There is the credit for child and dependent care expenses from line 11 on IRS Form 2441. Line 6D is the credit for the elderly or disabled on Schedule R. And then finally, 6L is the amount on IRS Form 8978, line 14. This is a tax credit that really applies to partners of partnerships. So if you don't have any partnership income, you probably don't need to be familiar with this tax form. So you would enter the amounts of these, and then you would compare that to the amount of the tax credit, the lifetime learning credit. You would enter the smaller of that. So that's what that means. In this situation, for all intents and purposes, we've concluded that John Doe is not claiming any of those other tax credits. So when you walk through the tax calculation, you end up with a full $2,000 of the tax credit available. But, if you took, enough of the foreign tax credit to reduce your tax bill to zero, and there's only $500 worth of this tax credit available, then you would claim the appropriate amount on IRS Form 1116, and then you would claim the remaining $500 on IRS Form 8863. So that's what I meant by there's an ordering process to non-refundable tax credits. So then you would take this, we'll go back to $2,000. This is the line 19 amount. So we go back to IRS Schedule 3, and we enter that line 19 amount right here. So this is after the calculation, after we've determined that we're taking the full credit, then we would report the full credit here. So again, if you did all of those calculations and you could only take $500 of the credit, then you would see that kind of stacked up against all of these other tax credits, and hopefully the correct combination would result in a zero tax bill. So if you're using tax prep software, this is pretty much done automatically. You just kind of complete the information fields and the computer will do the rest of the calculation. But for people that are completing this form manually, that's how you would report this. So I think that's all we have for the lifetime learning credit. So, as I mentioned, there are lots of forms here. We'll put links in the show notes to the resources we've created about forms and about the forms and schedules mentioned here. We'll also put a link in the show notes to like IRS Form 8863, the walkthrough video on how to claim the American Opportunity Credit, as well as the credit limit worksheet for IRS Form 8863. So a lot of notes in the show notes, just to point you to resources in case you need to use them. So if you like our articles, please feel free to subscribe to our newsletter. If you like our YouTube videos, please subscribe to our YouTube channel. And if you have any questions or comments, or if there's a topic that you'd like to see covered in an upcoming video, please hit me up in the comments section. Thank you very much and have a great day.